Hey, morning leverage addicts. Today we have Hadley, as you can see, in catch up on the Saturday morning. And we are going to go over a couple of things that you guys have been talking about and wanting to learn more about. And that is, first of all, how you find properties and build instant equity. Secondly, we're going to look at the cash flow positive deals. And then also the third one is looking at how you can recycle that deposit out, because cash flow is one thing. Sometimes if you're in a position where you need to build up the equity, then you really want to go for those deals where you can add value, recycle the deposit so that you can go again. But one thing that we need to note before we dive in is that often property strategy is not one size fits all, okay? And what I mean by that is that you can't just emulate somebody's strategy in your current situation because your financial position could be completely different, okay? And so what you need to understand are two things, okay? And this is how you will determine what strategy is going to be best fit for you. The first one is understanding your cash flow position, because that's going to affect your borrowing capacity. And then the second one is understand your accessible equity position, and that is how much deposit you have. Now, if you think of a person that has a lot of equity and a lot of cash flow, of course, they can go to the bank and just borrow anything and do any strategy that they want, right? The thing that they will need to focus on is really what's going to fit their lifestyle, and then probably try to find the best bang for buck. And what I mean by that is looking at the returns. So for example, they might not need a cash flow property as much as a land bank opportunity, where traditionally have shown the best gains long-term, right? Meaning if you buy a land bank because of the development potential in the main city, and there are infrastructures being put in place, government spending to build more hospitals, schools, etc., those traditionally have shown the best gains long-term. But to hold on to that, you're going to need substantial cash flow, or you want to put a big cash deposit in. So that's not a strategy for everybody. But for someone who's short on deposit and short on borrowing, there is still a strategy. There's a strategy for absolutely everybody. But someone who's starting out, the thing that they might want to focus on is JV or joint ventures, where they can add equity on the property and then cycle some of that back out. Or they might even look to flip so that they can convert the cash and then they can build up the deposit that way. So there are strategies for absolutely everybody. And what we're going to do today is not only is Hadley going to share some wisdom here, but also some of the deals that he has gone and done with his clients recently. So I think he's got about two today.
Yeah, very cool.
Yeah, awesome. But you guys don't know who Hadley is. We've had another episode in the Leverage Addict podcast on the YouTube. Please check that out so that you guys can get to know Hadley a little bit more. Today, we're going to focus more on the deal. So I'll let you sort of kick off and talk about, what's been happening on your side, and then sort of how you came about these deals.
Yeah, cool. In terms of these two deals, the first one here that we'll share with you is more so a cash flow, is more so an equity-based deal. There's some cash flow in it. It's where the focus was around how do we maximize the person's equity gain in this, but also to make sure that we're covered from a cash flow perspective. So the numbers in that one are pretty good. The second one that we've got is more a cash flow deal, but there's also some significant upside with that later on down the track. Both of these deals that we got were on-market deals, and I think that's probably one thing where a lot of people get sort of tied up is like people go searching for off-market deals because they think off-market deals are going to always give them the best results. Chances are people pay more for off-market deals because vendors go, I've got nothing to compare this to, so let's go and put our price where we think our price is. The person that's buying it. Sorry, go.
I was going to add to that because for me, there'll be agents, right? Agents always come to you and go, hey, do you want to sell your property? But you don't want to really put in the effort to go, hey, I want to put it on the market. I got to get the tenants out. Like there's so much you need to do to actually put it on the market properly. So often you might just tell the agent, oh yeah, I'm selling this property, but I'll only take this price. So that's why not very often the off-market deals are undervalued unless they're going direct, they're doing mail drops, etc. But there are opportunities, definitely. But most cases is like vendors like myself is like, oh yeah, we'll sell the property, but if you can bring me that price tag, I'll consider it. And so that's why, like, what sort of to add to Hadley, what he's saying and the insights around it.
Yeah. Also, too, it can also be handy too for a vendor to get a bit of market exposure as well in terms of, property's been on the market for a month or property's been on the market for 2 months, agents agencies go for 90 days. So the closer it gets to the 90 days, the agents also got a bit more sort of drive to get a property sold. The vendors had 2 months of, hey, your property's not worth what you think it is. And then that also opens up sort of opportunities as well with that. So these ones here, I'll jump in and I'll share my screen, and we'll start with the back unit on this place. So this one here is 612 Frederick Street in Mahora and Hastings. So we bought, this was on a cross lease section. So we don't normally buy cross leases unless A, the deal's exceptionally good, or B, we can purchase both of them. So
maybe expand on it a little bit. Like, what's your rationale around cross lease?
Cross lease, you're just quite limited in terms of what you can do. In terms of extending the building, you've got your flats plan, and you have to, if you want to change anything to the exterior or to the house that's not within the footprint, you have to get the neighbours' consent. You've got to change the flats plan for that to happen, so we haven't got a defective title. And then if you want to subdivide the property, then you've got to get the neighbours' consent to do so. So generally, we tend to steer away from them unless they're really solid.
Yeah, definitely.
Okay. Yeah. So in terms of this one here, this is a 2-bedroom house on the front. You can see here there was a carport that was converted into another bedroom. This here belongs to the front house, which we'll cover off as we get there. Or you can see through the gap there. But the house was pretty tidy. The driveway's a bit narrow, but we could buy the entire section.
Yeah. So this is a Hastings property, and actually, if you are listening to the podcast, it's quite good condition. It's kind of renovated, I would say.
Yeah.
Yeah.
Yeah. So we didn't have to spend a whole lot on this. There were just some draft stopping stuff for healthy homes that needed doing. The carpet was fine. The paint was good. That was the only healthy homes sort of issue that we had. But as you can see, everything's fairly tidy and ready to rent. The other sort of future potential that we've got with this place here too is that, I'll just scroll through till I get back to the garage, is that there's potential for gone too far. There's potential here there's a garage to the left-hand side here, which we've spoken to council about, around converting into a 2-bedroom sleep out, which is doable. So this is where Blandon was talking earlier about, what does your strategy look like and what's going to work for you? So when we were talking to the clients about this one, we're like, right, we've got options here. That do we convert the garage? And that means that it's going to reduce your saleability for this property later on down the track, because we've got a 4-bedroom house, no parking or no indoor garage parking. So it's probably going to put some people off. If this is a property that we're only looking to hold for the next 10 years, the yield's good, let's just get it subdivided, hold it, and then you can sell it as a 2-bedroom unit with a 2-bedroom garage, which is going to add a whole lot more appeal to prospective buyers. So in terms of plan for this place, we're going to leave the garage as is, because they're okay with the cash flow position, and the clients at this stage, can't be bothered with dealing with council from a renovation building consent perspective. But what we are going to do in the next 12 months is just subdivide this back section off into one, and then the front house off into two. So
essentially, is it like what you're saying is like, okay, like as a standalone sort of house, right? If you just look at this listing by itself, it's a cross lease, not that strong. It's a nice house, like cash flow is okay, and you don't have much future potential. But the opportunity was to also buy the back house as well. That really made the difference.
Yeah. So initially we looked at just buying the back house because the yield was close to 10%. And then with buying the back house and combining that, our yield dropped by about 2%. But the upside there being that we've got complete control over what happens across the whole section. The other thing is that 2-bedroom units in this area, nothing sells below sort of 470. So we'd got ourselves a huge amount of equity in the purchase of the property, but also too we've now got a freestanding house rather than or we will have a freestanding house rather than the comparables, which are all sort of cross lease units, like behind this particular house as well.
Can you just walk us through the high level numbers? What was like the total cost? And then what was the sort of appraisal or comparable markets analysis?
So in terms of what they were initially listed for $790, so $395 for this unit, and I'll jump over and show the photos of the front one. So $395 for this one, $395 for the back. So they wanted $790 for both of them. We got them for $740. So we sort of a $60K saving there. There's about across all three units, there's about $40,000 worth of renovations that have been complete there. Plus our fees gets us into all in for $800, and then we're getting $1,250 a week for all three of them. So we're sitting at about an 8.1% gross yield after all costs.
I think this one will sit quite well on a lot of the first-time investor because they're often a little bit scared on the properties that are like, in a lot worse condition that we would want to buy, So when we see like a run-down house, it's gold. It's very tidy, so it's definitely suited for a lot of the newer investors.
Exactly. And from a CMA perspective, we sat at about 950 when you look at everything else that's around the area that's sold recently. So there's also 150K of equity that sits there as well. And that's going to vary a little bit from valuer to valuer, but that's roughly sort of where we see it from a high level perspective.
So let me just reiterate and making sure that I understand as well. So essentially, your total subdivision cost plus any touch-ups on renovations plus finder's fee, the total cost is $800,000.
Sorry, we haven't done the subdivision as yet. That's a stage 2 thing that we're going to do in 12 months. The main thing is just to get them rented as quickly as we possibly can, and then the subdivision is going to come in sort of 12 months as a stage 2 added bonus. At the moment, the other cross-lease properties in the area are sort of sitting around that 450 to 550 range for a 2-bedroom unit.
I might have missed it. So what is it that you're adding to the property? Because this one is quite renovated, or is it the back one that's quite run down?
No, they're both in really good condition. There's not anything that's hugely run down. It's more so just been around like bathroom tuck. There are a couple of things in the shower that needed doing, healthy homes, curtains, nothing huge, but those little things across 3 units don't take long to add up.
That's good. And so are there a rough idea on what it might cost to subdivide to get the maximum valuation on this?
Not as yet. We've had sort of varying quotes from surveyors that have said between 40 and 70. So we'll cross that bridge when we get to it. But the sort of first thing was, if we can control the whole section, we've got a sort of stage 2 of it. And I think that's really important when you're looking at property as well, is like today and here we've got X, but what does stage 2 look like for us? What can we do in the future that's going to also add that additional value?
That's awesome. That's a really cool deal. So this one here is sort of a mixture where you've got a full land bank that's allowing you to have better long-term growth. Also, you've got decent cash flow while you're holding on to it. Are there any sort of social housing contract on this one, or was it not in the right area?
So we've got social housing contract for all of them. So $450 for the 2 bedrooms and 350 for the 1 bedroom at the front.
That's really good work. So essentially, you've got an 8% yield property. It's got full section, which means you can do the subdivision and you can build a new build for the future. And it's got interest deductibility because it's got the social housing contract. So all in all, a really, really good deal for probably a beginner investor that just wants something tidier. Even for the medium investor as well, I think that's certainly a very awesome deal.
Yeah, in terms of where it is, because it's really centrally located, it's pretty sought after in the area that it is. I was saying to the clients when I was talking to them about it, it'd be a property that I'd buy that I wouldn't sell, because I think the land value and the location is going to be one of the ones that are going to take off in the next, in the next cycle and high demand.
Yeah, that's awesome. Maybe we can jump into the second one. What do you have there?
Yeah.
This one actually I know quite a bit about.
Yeah. So in terms of this particular property, this is one that we bought for 2 lots of clients at once. So there's a line that basically goes down. So we bought these 2 for one client and these 2 for the other, both at the same time. So these I'll just bring the photos up so you can see them.
Were they freehold title or cross lease?
So these are 2 freehold titles. So the 2 on the right are freeholded. The 2 on the left are freeholded. So the sort of long-term view with this, there's already resource consent to chop these up into individual titles. The only downside to it is, in getting that resource consent executed, is there's another 2 that are to the left of this that are included in the resource consent. So we've got to get them to do it at the same time as everyone else.
You can pay for them.
Potentially.
But essentially, just to walk high level, this is what I'm seeing on the screen is a freehold section. It's got 4 units on it, but the 4 units are spread over 2 freehold titles. If you're looking at the whole section, it's about 1.4 million. But we were able to find 2 separate clients to buy one side each, and that made the deal work because it wasn't easy just to go, okay, we've got 1.4 mil to put in the deal. We pretty much lowered the risk by spreading it like that.
Yeah, exactly. The other, to give you just some more insight about the area, so these ones here are in Bluff Hill and Napier. So Bluff Hill's sort of the area, or one of the areas to live. Just down there's like 400 meters to the middle of town. And then there's sort of nothing that sells in here from a 2-bedroom house perspective for any less than sort of 470 to 520. So there's also a chunk of equity. The other thing we really liked about these is they're all brick based. So we've only got a tiny bit of weatherboard up the top there from a maintenance perspective. And the brick's obviously long wearing, keeps your house warm. And the tenants that were in there have been there for a long time, but take really good care of the house. The other thing that we're gonna, when we look at the kitchens, in terms of keeping them from a rental perspective, these kitchens are the best kitchens that you can get or that you can have. They if you get water in them, they don't swell. And it's a case of painting them and putting some new handles on them to smarten them up. If we're going to sell them later on down the track, then definitely new kitchens have got to go in there. But from a rental perspective, with these, they don't swell, they're hard to damage, and they get some really good longevity out of them. I love
it when I see the steel bench top.
Yeah. Yeah. Minimal damage.
Yeah.
Backyard's pretty small and pokey.
So maybe we can just walk over the high-level numbers first. So what did we end up sort of purchasing them at, and what sort of rent or yield was this expecting? Yeah,
so we've purchased them for $675 each, in terms of each block of 2, and then from there they're going to get $1,270 a week out of rent from them. So we're sitting at about a 9.4% gross yield all in there.
Yeah, and then of course there's the finder's fee, and then are there some healthy homes that need to be put in?
So that 9.4 is including our fees. It's just there's also a little bit in there. I've also allowed 10 grand just to fix up the couple of small healthy homes things because they're pretty much ready to go. So that's sort of all in for 705, and then that $1,270 a week from a rental perspective. And they're also going to end up or two of them are definitely going into social housing. The other two, the clients aren't quite sure whether they're going to go down that route or not.
I see. Yeah, they still have a little bit of disbelief. They need to see 10 other ones working first.
Potentially. Yeah, but we'll.
I love my social housing contract. I don't have to worry about anything.
And then sorted.
They will fix everything. And I was like, why would I not take one?
Yeah,
and it's deductible.
Even better.
Exactly. That's awesome. So with this deal, how did you end up sort of getting the two people together?
Typically, we work with you guys around, hey, we've got the other side of the building that'll be a cracking deal for someone. Have you got someone that's a fit? And so it happened that there was someone else that was looking for something similar. They came through to us. We had a chat with them, gave them the rundown of how everything works, and the rest is history, so to speak.
Definitely what we try to do as well is obviously this group is our main sort of clientele where we will try to present some deals if there are that we think are worthwhile to pursue, right? So it works well. It's like, well, you're learning and then you see some live deals and then, you're on top of mind because you're in the group, right? So I think it's a win-win for everyone.
Yeah, exactly. That worked really well. And then also too, in terms of like a future planning for these ones and the stage 2 type of thing that we spoke about with the last deal, is that because they're as close to town as what they are, they're going to be really appealing for people as an on-sale opportunity for someone that just wants like a lock and leave house. That then the clients are going to spend some money, put new kitchens in, new bathrooms, paint, carpet, just the basic cosmetic stuff. Give the outsides a bit of a tidy up, and you're going to have something really appealing there for professional people or couples that want to move into town or want to just walk to work and back. So location for this one was also one of the key things. We thought, we're onto something really good here.
Yeah. So I've got a block of 3 units in Napier. Like I've had it since it's a joint venture, like with a friend, and they've never had vacancy. It's like the rental demand is so high. It's kind of insane. It's like they move out, like someone moves in like pretty much next day. Or maybe my property manager is just super awesome and sometimes you don't even realize it. Yeah. But never had a vacancy rate since 2019. Yeah.
Yeah. Yeah, the rental demand down there's huge.
When I say vacancy rate, I say no vacancy since 2019.
Yeah. Yeah, the rental demand down there is insane. And I think that was the other thing too, is when the cyclone came through, there were a lot of people who were really nervous about the area and about Napier. And that's where we picked up the Frederick Street properties were around the time that the cyclone had been through. So I think it's also important when you're out there and you're looking is that if there are things that happen or there's a disaster or something goes wrong, is that make sure you fully investigate where the actual areas are that did have any damage. Because the Frederick Street one, well, none of the properties that we manage in Napier had any damage to them other than one of the fences got blown over slightly. The Frederick Street properties, there was you drove through and went, what cyclone? There was just nothing that had happened to them. So it's really important, rather than just looking at the news and them showing the Esk Valley, which is, when you drive through that, is horrific. And you definitely wouldn't want that to happen to you. There's other places that weren't affected anywhere near as much. And so it's just about being vigilant and making sure that you're doing your due diligence to check all that stuff out.
Yeah, and I always find that when there are big changes, there are opportunities and there are deals to be had. Like, if everyone is saying, we're going to put it on hold, we're not going to do anything, we're going to see what's going to happen, then that's like a really good time. If majority of people you hear is saying that, like the vendor that still have the property on the market, they want to sell it, right? And they know it's like everyone is talking about waiting. I've seen so many good deals during those times, like the tax rule change, the LVR rule change, like government like introduce some sort of thing that affects everyone. There's usually something, some deals in the market, just because people will be like, 10, 20,000, 30,000, like, they're already lowering their reserve price, right? Because of the changes.
Yeah, it's happening in the moment with talking to people around the election. There's sort of every time there's an election, people hold off buying, but people also too hold off selling until finding out what happens on October the 14th or whatever date the previous elections have been on. But there's always, like Belinda said, there's always opportunity. And with the same thing with Christmas, like every year, December, probably the best month to buy, because everyone's worried about beers and barbecues rather than seeing what's out there. And everyone loves a Christmas present, so just something to bear in mind as we get closer to the end of the year as well. Yeah,
definitely. And I think it's always, we need to remember that if they're still on the market, they want to get rid of it. It's like if they're like, okay, well, I don't want to get rid of it, then they'll just wait till like, okay, after summer, like everyone comes back from their holiday, then list it on the market if they're not urgent. But if they still listed at that time, they want to get rid of it. That's good. So really appreciate. I think we might close up the workshop there. We sort of gone over time a little bit, but really appreciate your time, Hadley. Thank you for sharing. And I'm sure if the team wants to learn more, sort of get some help in that area in terms of finding, they'll reach out.
Yeah, cool. Awesome. Really appreciate it. Thanks for your time, guys. Thanks for showing up this morning.